Bitcoin's energy use drops. After taking a nosedive in June, the price of Bitcoin has stayed so low that it's forcing the blockchain's massive electricity use to similarly dip. Over the past couple weeks, Bitcoin's energy consumption has dropped by more than a third, according to estimates of annualized electricity use by digital currency economist Alex DeVries on his website digiconomist.net. Bitcoin's energy hunger, which has alarmed environmentalists and consumer advocates concerned about pollution and utility prices, comes from the process of mining new tokens. Bitcoin miners earn new tokens by validating transactions through an inherently energy-inefficient process, using specialized machines to solve complex puzzles. All that computing by all those machines has led to an energy appetite rivaling that of entire nations. Bitcoin's annualized energy consumption has fallen from about 204 terawatt-hours, TWh per year on June 11 to around 132 terawatt-hours per year on June 23. But even though its electricity use has plunged, it's still very high, roughly equivalent to the amount of electricity Argentina uses in a single year. Just how much energy the Bitcoin network uses is tied to its value. The more valuable it is, the more incentive there is for miners to ramp up operations, perhaps by buying new machines. The price of Bitcoin peaked in November 2021, reaching around $69,000. Since that peak, DeVries estimated that the blockchain's annual electricity consumption ranged between roughly 180 and 200 terawatt-hours. That's about the same amount of electricity used by all the data centers in the world every year. Bitcoin's value has fallen for months, but it didn't result in an immediate drop in energy use because the price stayed above a key threshold. If the price stays above $25,200, the Bitcoin network can sustain mining operations that use up about 180 terawatt-hours annually, according to research DeVries published last year. Since miners have already invested in their machines, they'll likely keep them running as long as they can turn some profit earning tokens. The problem is that if the price of Bitcoin gets too low, then miners risk losing money in electricity costs. So they might pause or retire older, less efficient machines that are becoming unprofitable, which is what we're starting to see now. The value of a Bitcoin has lingered below $24,000 since June 13. We're getting to price levels where it is becoming more challenging for miners, DeVries told The Verge that day. Where it's not just limiting their options to grow further, but it's actually going to be impacting their day-to-day operations. And it's not just Bitcoin. Ethereum uses the same energy-intensive process to maintain its ledger. Its price has similarly plummeted this month, although it has rebounded somewhat over the past week. Ethereum's estimated electricity use yesterday was nearly half of what it was in late May. There's been a big push to clean up cryptocurrencies. Some blockchains are much less energy-intensive because, unlike Bitcoin and Ethereum for now, they don't use puzzle solving to validate transactions. Using renewable energy can get rid of emissions, but skeptics are still worried about crypto miners competing with nearby residents for electricity in that scenario. There's even been a crypto climate accord proposed to figure out how to get rid of emissions. The problem they're all trying to solve will continue as long as some blockchains like Bitcoin continue to eat up vast amounts of electricity. Bitcoin's energy consumption has plummeted to levels not seen in over a year following the latest price collapse. Figures from Digiconomist, a site tracking Bitcoin's electricity use, show that the cryptocurrency saw its consumption drop by around a third within the space of a week in June. During that same time, Bitcoin's price fell from just above $30,000 to around $20,000, further compounding a months-long crash that began after hitting a new record high of close to $69,000 last November. Separate figures from the Cambridge Bitcoin Electricity Consumption Index estimate a 25% decline in energy use, putting it on a par with levels seen last August. Bitcoin has faced severe criticism from climate activists and environmentalists for the amount of power that its network requires to operate. In April, a Greenpeace-backed campaign called for Bitcoin to switch from a proof-of-work system to a proof-of-stake mining method in order to improve its environmental credentials. A POS protocol would abandon the complex mathematical puzzles required to secure Bitcoin's network and generate new units of the cryptocurrency, a process known as mining. However, critics of the change the code. Not the climate campaign argued that it would be impossible to implement such a massive change to Bitcoin's underlying code. The Bitcoin price has again dropped under the closely watched $20,000 per Bitcoin level after clawing its way back over the psychological barrier it crashed under earlier this month, that some feared could spell disaster. Ethereum and other major cryptocurrencies BNB. minus 0.2%, XRP plus 0.6%, Solana, Cardano and Dogecoin have also crashed back, each losing between 5% and 10% over the last 24 hours as bad news for the crypto market piles up. Most short-term technicals point to an above-average chance of a final, washout-style decline before this bottoms. Mark Newton, technical strategist at Fundstrat, wrote in a note seen by Bloomberg and warning the Bitcoin price could fall to as low as $12,500 and $13,000 in the short term. In recent weeks, Bitcoin miners who secure the network in exchange for freshly minted coins have been forced to offload their Bitcoin to keep the lights on, analysis by Arcane Research found, putting downward pressure on the Bitcoin price amid an energy cost spike. Bitcoin mining has become the most deciding factor for the crypto market overall, Martin Heabook, head of blockchain and crypto research at trading platform Uphold. Mining companies' profitability is a factor of equipment, bought on credit, hence repayment obligations, running cost, electricity, and revenue, the Bitcoin price. Until April 2022, miners held on to their mined Bitcoin each month in expectation of rising prices. It now emerged that starting back in April, they began selling their entire monthly production of Bitcoin, and even parts of their overall holdings, in anticipation of rising energy costs. They still need to pay for electricity. This depresses the price of Bitcoin and hence the entire market. The Bitcoin and crypto price crash that's wiped around $2 trillion from the combined crypto market since late last year has caused chaos for the crypto industry, leaving many fledgling companies fighting for survival. Analysts at Wall Street giant Goldman Sachs have downgraded crypto exchange Coinbase to sell, warning the company could be on track for further degradation, even after a devastating 80% price crash. Crypto lenders such as Celsius have been forced to freeze withdrawals while others, including BlockFi, have had to seek emergency funding. Sam Bankman-Fried, the billionaire chief executive of crypto exchange FTX, has told Forbes some smaller crypto exchanges will soon fail.